Bro, yesterday I wasn't able to make a market recap video, but I'm going to recap this yesterday's action now. So let's do this. So coming to the day, let's just remove all of this garbage here. Let's go. So a couple of mistakes were made, and I took a loss again. And I'm backtracking with my funded account challenge like crazy. So I'm gonna show you this daily. How's daily looking like? Yesterday, coming to the markets, we had taken this low. Okay, a lot of these lows. Also that weekly low. So a lot of sell side was swept. I was only looking for buys during London session because like towards this daily gap, because like in my opinion nothing else could have been done. Like buys are the only option. Okay. So I was getting long. What do you want to usually get when you go long? You want to get a sweep of some type of shorter time frame liquidity delivery from fair value gap, break of structure in a 5-minute chart. Well, let's scale to 50-minute. So basically, what I saw here was a huge drop to that liquidity pool, taking that liquidity, starting to trend to the upside. Obviously, we are kind of choppy, but that shouldn't matter too much because we came up here at the start of the London session. We take the Asian liquidity like that. So that's the first sign that now we have taken liquidity. If we are willing to move higher, we should now shift in structure. Also, this was SMT with DXY. So things are lining up for our bias. I scaled to 5 minutes, and you probably, if you know trading, you can probably see where it went wrong, because after this I started to look at fair value gaps and displacement to the upside. I saw this one, that's a break structure to the upside. And then I just executed from that fair value gap. Stop at that low, target at that high. That's 2% target. And it just melts to my stop. And you can see it ended up moving at the end of the day up here. So my bias was right. I was kind of right, but my execution was wrong and bad. And I figured out maybe I should be a little bit more picky with my break of structures. So for example, here we break structure, but the price action is super choppy like that. Plus it's NFP Wednesday, so I should have been a little bit more cautious about that, and maybe expect a break of structure above that high. Plus, well, I will show you what the XY was doing, because it was nothing good. I will say that. So you so you can see how DXY ended up dropping. So this is what I mean by SMT. DXY didn't take the high, DXY had like that. So that's a massive SMT. But yeah, you can see how DXY moved to the downside and EU moved to the downside as well. So like they were not really lining up, and when I looked at the DXY, I wanted DXY to have some nice sell side target because EU has very nice buy side targets. So then I look at DXY and sorry, what was the area then? We were basically trading. This is the London session. Let me just real quick. So this is the, I mean, I don't need this. I don't know why I did that. But yeah, we were trading in an area where this is a bullish order block. So I know that there is a chance that we could push above from push higher from that order block. We had already one bullish reaction there. And so if DXY was going to be bullish, then you obviously don't want to be bullish on EU. But yeah, DXY was kind of not lining up that perfectly. Like the action was kind of different if you look at the daily there. Because in EU we got that doji to then target the higher daily fair value gap. You can see that doji. The same candle in the XY, like similar candle in the XY, kind of is printed, but the XY doesn't print daily fair value gap to target. So again, the problem today was that I was a little bit too eager to execute, and I should have waited for that turtle soup, because you can see how that would have lined up perfectly, that turtle soup with my bias. 30-minute time frame was perfectly respected there. That fair value gap, that's algorithmic. Then we turtle soup that low. Actually, let me see if I can have this. Turtle soup, there you go. So we turtle soups that low, and that would have been the trade. That would have been the entry. That would have been the, you know, and maybe in a future when I'm a professional trader, I'm able to re-enter these trades after I've lost, and take this still. And even if I did want to enter immediately off of that turtle soup, I could have entered from that fair value gap. Stop, like give stop a little bit of room like that, and then just ran up here. But yeah, this was super like clean trade in my opinion, this turtle soup long. And the off-putting things here were like, first of all, GBP USD wasn't very bullish, and you can see how well EU breaks above previous day's session highs, stuff like that. GU only breaks above the Asian high during New York as well. Doesn't even do it in London. So GU is much more bearish, and it just wants to consolidate clearly. So first of all, GU doesn't give me any confluence or confidence for this market. The displacement and price action initially is super choppy in EU anyway, and DXY is kind of moving to the same direction with the EU. So, because you can see how we've been dropping, and EU has also been dropping. Like, obviously the individual candles are moving to opposite directions. So if when we dropped here, DXY moved higher, but if you're looking at the how much it moved higher, there it was like super small. I believe this was the move. But anyhow, so what I should have been waiting for is DXY lining up better, and that's pretty much the case. If DXY lined up better, I think it would be still fine to execute this fair value gap here. But especially if I have these certain confluences such as choppy price action during NFP week and stuff like that. Especially during those days, I should be more like cautious with liquidity, and I should be targeting more of these like place where I want to see like these higher liquidity pools or bigger liquidity pools being taken out before a move. So basically, I just got liquidated here. I would have made absolutely huge amount of profits with these kind of trades, but what can I do? That would have been 3R trade there. So so basically, what I learned today is that wait for DXY to line up. If DXY doesn't line up, then try to look for, is there some more liquidity that could be taken out before you are moving to your favorite direction. And so when that liquidity is taken out, you can execute immediately off of this kind of turtle soup long idea. And yeah, I will show you how I journal my problems. This is super valuable in my opinion. So I journal basically here everything. If rules are being met, I result everything. Then I put here lesson. If I've done something problematic, if I've done something wrong, I will put my lesson here. So today I have written DXY is not lining up. Be more picky with 5-minute break of structure. So not those like choppy break of structures. So I will collect all of these, all of my lessons to this notebook, and then I will read them every single day before I start trading, so that I don't commit the same errors again. Very kind of interesting error that I also committed on gold was my weekly bias, because you can see weekly candle is starting to print to the upside. My bias was towards this fair value gap. Now, why was it wrong to target that fair value gap? Because targeting that fair value gap meant for me that I was only looking for shorts, and when you see a bearish SMT here, I started to look for shorts, and I expected this order block to hold. And so when you see a break of structure to the downside from that order block, I took short. And I have recapped this trade already. But I want to say again, why this didn't work out, why the liquidity target wasn't down here. And I also journaled this trade, and you can see what I've written here in the lesson. The COMEX futures had already swept my target, so that should be super off-putting. So put in your mind that the only reason why I was shorting was because that unmitigated fair value gap. But if you're going to gold futures, go to the COMEX, that's the American thing. So gold futures, not normal gold futures. Look at the same weekly fair value gap. Where is it? It's here. And that's perfectly being mitigated and it's rejecting here. So looking at the gold futures should have been super off-putting that the target was already swept in gold futures. And so now the target should be here. This is like we can even think about the fact that, okay, gold futures are looking like this. So kind of sweeps the internal liquidity. Now it's moving for the external. So I never should have taken shorts in gold either. Now I didn't think about this when I started trading this and took the trade, because I wasn't too cautious about that gold has like futures. Obviously it does, but I never really cared about it. But I just all of a sudden decided to look at it. We had mitigated that already, so that's the reason why our bias was wrong. Gold futures had already taken that liquidity pool, so these are kind of things that you kind of have to learn through practice and through errors, but I believe that everything will line up at the end, and I will make it. Peace.